All right. Welcome, everybody, back to another episode of Proof of Vision. Great conversation with you today. We had on the co-founder of Theo. They're a tokenization provider, primarily focused on the EVM. They've had some really, really good headway on Hyperliquid, which has been really cool to see. I think we get into it in the episode a little bit, but one of the main questions I have is there's a lot of tokenizers in the space, and how are you going to differentiate between what is becoming a very, very competitive environment? And I think they have a really, really good sound strategy for how they're going to do that in terms of monetization, in terms of distribution. Again, having really, really good traction on Hyperliquid helps. So Theo's got, a really interesting, I think, business model and path forward ahead of it. So obviously, hope you guys enjoy the episode. If you do, please like and subscribe, and we'll see you on the next episode. Thank you. All right, welcome everybody back to another episode of Proof of Vision. We have TK. He is the co-founder of Theo. How you doing?
Doing well. Thanks for having me on.
Yeah, absolutely, absolutely. It looks like a sunny day where you're at. That's a sunny, not so sunny day where I'm at. Actually, it's a little rainy, so I'm jealous. But we have to push on. Um, I always like to start the conversation kind of diving into your background a little bit. What were you doing before crypto? Or was crypto like your calling? I've talked to some founders and they're just like, nope. Crypto was my thing from birth, basically, and I ran with it the entire time. But let's talk about your background a little bit and how you got into the space.
Yeah, absolutely. So I've been in this space for around 3.5 years now. Before that, I actually used to work as a quant trader for a couple of different firms. So yeah, basically did trading for a couple of years and then got into crypto, which I think is like a pretty common pipeline into crypto. Just have a lot of friends with a very similar background. But yeah, that's pretty much it for me.
Nice. Yeah, it is funny how many people I talk to and that's honestly why I got into the space. So I don't have a finance background by any means. I got into the space though because it occurred to me that all of these very smart people from these quant firms, right, and the Silicon Valley tech companies were all piling into crypto, and I'm like, I better go look at that, right? I better figure out how I can get involved over there. So that's honestly like the original thought I had to why I got into crypto. So thank you for leading the way. Um, Awesome. Well, so you had a trading background. Obviously, I think that led you very easily into crypto. Um, but let's talk about Theo then. What is Theo? Why did you guys decide to found the project, and what problem are you guys trying to solve? Let's start there.
Yeah, so Theo is a full stack tokenization platform. So we handle everything from like the legal structuring, the actual technical and engineering work that goes into issuing the tokens and pricing them. But we go beyond just the issuance portion. So really our focus is on what happens to the assets that we issue, like afterwards, meaning like we're trying to get these things integrated into various different venues so that there's more sort of use cases for them. And I think the way to kind of aptly describe it is a lot of these sort of RWA and tokenization players up till now have focused primarily on AUM growth. I think Theo's main sort of KPI, if that makes sense, is not really AUM. It's rather other forms of utilization. So things like volume, things like how much is being borrowed against our assets. These are the types of things that we're really trying to drive forward in like this RWA and tokenization space.
Yeah, it's a really good point. I've followed the tokenization space quite closely over the years, and I agree with you. Like I want to get your opinion on this too. Actually, right? Like, what's your thesis behind like what? I guess let's talk about T-bills because obviously that's one of the first products you guys are focused on, right? Is kind of a tokenized version of a short-term T-bills. What do you guys view, or like, what is your selling point when you go out and you're selling it to, these TradFi funds or some of these asset issuers on why they should tokenize their T-bills? What benefit do you think is the biggest selling point for them to actually want to come on chain? I'm of the opinion that you need it, you know, there is a certain argument to be made, obviously, for like opening up distribution network effects, stuff like that. But like at the end of the day, you have to make sure that it's like financially advantageous for them, right, to bring it on chain. So I'm just curious, like, yeah, like what's your guys' thesis behind that, and what's the selling point there?
I think distribution is really like the main driver, right? Because if you take a look at some of the growth curves, like within crypto, um, I mean, there's protocols that are able to get to like billions and billions of dollars of TVL within a year, and that's really difficult in TradFi. It's you need like a really big sales presence to be able to do that effectively, and so I think the firms like these traditional institutions are kind of seeing this, with things like Athena, things like Hyperliquid, like how quickly that they're able to grow and become massive businesses. And they kind of want a piece of that pie. Like they know that crypto has um, this really insane distribution kind of worldwide. And if they're able to effectively plug into that, that's just, that's more growth for them.
Yeah, it definitely makes sense. Yeah, distribution is always king. They say with many products, right? And so, I think you're absolutely spot on. It's kind of like tapping into like this crowdsourced liquidity, right? That you can tap into globally by tokenizing your assets. Um, but then the real question is, how do you, because these are traditional assets, right? They are somewhat subject to like whatever the jurisdictional regulations are for them, right? Because a lot of them are securities, right? Um, so it's been interesting to see, like take Ondo and OpenEden and some of these other tokenization platforms. It's been interesting to kind of like hear from them, like how they're thinking about the actual tokenization and like the legal structure off chain to allow these assets to actually come on chain. So just curious, like a little bit from it can be as high as you want, high level overview. How are you guys structuring this off chain to ensure that these assets are coming on chain compliantly? And ultimately, like, how are you guys handling custody as well? I think is an important point.
Yeah, so we have a few really great partners that we work with, like on the institutional side, that help us to do all of this stuff in a way that's compliant. So namely, those would be like we work very closely with Standard Chartered. Libera is like their tokenization arm. And then we also work very closely with FundBridge, which is kind of a fund administrator that has a lot of the sort of compliance and like regulatory components already in place that we can take advantage of. Um, and I think like across a multitude of different jurisdictions over like the past like 1 to 2 years, a lot of these laws and regulations have become a lot more clear. And so there's not really like one answer in my eyes. I think there's like many ways to kind of go about doing this across, it could be in Singapore, it could be from the BVI. It's, there's pros and cons to every approach, but the one that we're doing right now is through our partners, and they're primarily based out of Singapore. So that's the structure that we chose.
Gotcha. No, I think it makes sense. And the other aspect of kind of the structure of these RWAs at times is, this concept of like bankruptcy-remote structuring, for the assets. If you are knowledgeable, can you explain to the audience like what that is and what kind of like protections that builds in, for the assets?
You know what? I wouldn't be the right person to answer this, but what I will say is that all of these sort of tokenized assets that we are bringing on chain, the actual underlying like TradFi asset that's being wrapped or like the fund structure, all of the custody happens through Standard Chartered. So that's kind of a very reputable name. They're a very large bank, and so yeah, that's I think another benefit of being able to work so closely with these large sort of names is you're able to kind of lend, or they're able to lend their reputation and trust as well.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance. Yep, that's a good point. One of the really interesting things about RWAs, in my opinion, is kind of like one of the main risks of of tokens on the blockchain, right, is that you can get hacked. You can get your assets taken. And what's really like compelling about RWAs, in my opinion, as long as they're structured properly, is that let's say I was holding, a permissioned RWA. I had it tokenized. I'm on chain now, and I get hacked. Well, I actually have some recourse at that point. I can go to my tokenizer and I can say, hey, something happened, like my assets just got taken or my wallet got compromised. And then they can blacklist it, right? And so now the hacker has no way to like get get off of the blockchain with my funds because they can't go and redeem them, right? They're actually held off chain with a custodian, and so that is actually a really really like underrated built-in security for RWAs. I think is one of the biggest hurdles I think for institutional adoption is like, hey, we see all these hacks that happen all the time, all this loss of funds. Like, what happens if that happens to us, or our assets? Like, we obviously can't have that happen. We can't have a world where that occurs, right? Um, so it's kind of interesting to see how this will play out over the coming years. But I think that's a really, really big use case of RWAs as well.
That's a good point. Like when we speak to family offices or people who are like more institutional in terms of like being allocators, they really like to hear that there is sort of like this security assumption that um, like if they get hacked for whatever reason, their money isn't just all gone. Now, of course, like let's say you were holding an RWA and like um, you supplied it to like a lending market or you supplied it to like a DEX or something and the DEX gets hacked, like then I think obviously you would be impacted by that. But um, that extra level of sort of insurance and guarantee because there is like an entity that is actually custodying the underlying asset is definitely big. And it actually like lowers the barrier to entry because like the risk premium isn't as high from the eyes of like these different funds and family offices when they're thinking about how to allocate their funds.
Yeah, absolutely. So it makes sense then, right? RWAs, focusing, I guess for you guys at Theo, focusing on, I guess, not just tokenizing them, but also kind of like setting up distribution on chain. Let's dive into the weeds a little bit because I do want to talk about the architecture for a minute. You guys have T tokens, right? And then you also have I tokens that you guys kind of use in your infrastructure. Maybe talk about those because normally, I think you really see like one token structure for a lot of these tokenized assets, right? You guys kind of had a little bit of a flavor on this, and I'm curious why you guys designed it that way, and like what's the ultimate use case for each type of token, in the stack for you guys.
Yeah, that's a great question. So the reason that we designed it this way is really a combination of like the legal side of things, in addition to just increased flexibility. And so what a T token is this is actually a permissioned token that you need to be whitelisted in order to be able to hold it, and also basically mint it or redeem it. And then the I token is sort of another wrapper around the T token that is permissionless. And we've also built the I token so that it can actually hold a multitude of different T tokens inside of it. And so you can almost view these T tokens as kind of like the smallest like building block or like the smallest unit within Theo. And then using the T tokens, you can kind of create different I tokens that might have like different exposures or different underlying assets. It could just have one type of T token in it, in which case it's really just like a one-to-one wrapper. But that I token would be permissionless. And so that's primarily what the users will actually interface with and hold in their wallet. Let's say you're a party that is like able to mint T tokens, then what you can do is basically onboard onto our platform and be able to, give us USDC. We mint you a T token, and then you can take that and then go wrap it into whichever I token you want to wrap it into, and then, you can go supply that to a lending market. You could go sell it on the open market on a DEX or what have you.
Gotcha. Yeah, it's interesting, especially from like I guess like a product canvas perspective, you can get really creative with those I tokens, right? Where, maybe you have an I token that's like an index of certain money markets, or certain money markets and then some private credit, for example. Um, I think the kind of design space there really, really opens up a lot in terms of like building these structured products and bringing them on chain. Um, because you're ultimately creating more utility and more distribution, through the wrapper model that you guys have kind of elected for. Um, so really, as with all things on chain, secondary liquidity and kind of liquidity sinks become very, very important in terms of how are you going to actually grow these tokenized assets now that they're on chain? How are you going to make them more accessible? Have deep enough liquidity that people can enter in size, et cetera. So how are you guys thinking about that, right? Because I know you guys have, I think, four different AMMs that you guys are currently trying to bootstrap liquidity on. But maybe talk about that a little bit because I think like one of the underrated hurdles to adoption for like any kind of an asset on chain is the cost that you have to pay to build that secondary liquidity. So maybe if you can talk about that strategy a little bit and the way you guys are thinking about rolling this out.
Yeah, it's a good point that you brought up about the cost of basically providing the liquidity. Um, we've like designed basically since day one, we've designed like our tokenization stack to minimize that cost as much as possible. And so just to give you an idea of some of the features that we've implemented, we have something called like optimistic minting and redemption, which basically allows us to give a quote for a KYC party to be able to mint at a certain exchange rate within a block on Ethereum. So normally a lot of the RWAs actually have like T+1 or T+2 settlement. And obviously like with that additional time, it just lowers the capital efficiency overall. And there's money that's like literally stuck for like 1 or 2 days. And that makes these things really hard to market make or provide liquidity for, especially from the perspective of like a fund or like a a trading firm or a market maker that has like pretty high hurdle rates that they have to be able to get past in order to justify market making. And so we've tried, basically since day one, we've been thinking of all of the different like friction points that have to be solved in order for like our RWAs to be able to be provided into these markets in a way that's like really seamless and smooth. And it all starts with how can we make it easy for the liquidity providers to do that. So that's one thing, and then the other thing I think, with crypto is just like incentives are really really powerful for bootstrapping liquidity and activity. We saw it with Hyperliquid, right? Like the amount of incentives that they gave with their initial airdrop was uh, like kind of like an astounding amount. And ultimately they were able to get billions of dollars into Hyperliquid before the incentives were ever even given out, because people were pricing it very very highly, pre-token. So I think like in crypto, there's no way around like there's no better way to incentivize a liquidity and sort of volume and activity than through that method basically. And I think if you can kind of design that in a way that makes a lot of sense from both the perspective of liquidity providers and also like just regular retail users, then you should be able to succeed.
Yeah, no, agree, 100%. And it really is, an incentives game on chain. So, and I think Hyperliquid, like, it was such a great like wealth creation opportunity, right? One of the second order effects of that though is that it kind of like raised the bar for all of these other projects in the space to now like have to like you have to somehow like measure up against that, whether you're on Hyper-EVM or Hypercore or wherever you're at, or if you're on any kind of other chain, right? Everybody's going to come back to Hyperliquid and what they did. And they actually, I mean, from a user perspective, like they did so much for the space when they did that because it's all these other, incentive programs are now raising, the values which they're giving out. And it's been a really, really cool effect to see, from a user perspective, obviously, just how much that has made a big difference. So kind of staying on the Hyperliquid discussion for a second. Obviously, that was one of the chains that you guys decided to focus on heavily, at first. I think the other ones are Mainnet and Arbitrum, probably a few others, but Hyperliquid seems to be, in terms of secondary liquidity, where you've found the most fit, or there's the most liquidity sitting right now. Maybe talk about that a little bit. Like, why has that been such an easy, low hanging fruit for you guys on Hyperliquid versus maybe some of the other chains?
I think the community on Hyperliquid is fundamentally very different from the other chains. There's a lot of people on there that are very active on chain and they're willing to try things, right? And I think that makes it, um, from the perspective of like a protocol like us, it makes it like a really nice place to deploy because you know that as long as you build a good product that works well, like you will have users that come and try it out at least. And so we found a lot of success on Hyper-EVM, and on Hypercore as well. We have a spot market live for our money market fund, and it's just been like we're getting so much feedback from the community. All of the other sort of Hyper-EVM teams, are very open to working together. And I think right now it's like probably the best place to deploy anything that's like financial related because there's also just such a large base of traders that are already on Hyperliquid. And again, they just got like a huge airdrop. They're willing to try things out. They have a lot of money in their pockets, so it's kind of all around like a great place to deploy.
Yeah, it's honestly it's a good signal, I think, to the market, especially on like the RWA side of things, because when I initially think about Hyperliquid, I think about people that are more risk on, right? These are traders, these are, airdrop hunters, obviously. These are, people that are kind of looking for an edge further out on the risk curve. And to see like something like low risk, like tokenized treasuries kind of have some initial traction there is very positive, right? It kind of gives me a signal that, again, it is a more of a holistic type community and user base that you have on Hyperliquid. That maybe does want to park some of those earnings into something that is safe and a little bit lower yielding, like tokenized treasuries.
Yeah, that's a good point. I think honestly, like I don't even know if they're viewing it as like a lower risk instrument per se. I think they're just excited to try new things. So if you come on there with some new offering that doesn't already exist, like people just want to test it out and see how it is. And I think that is like the really exciting part, to be honest. It means that I think there's a lot of like room for innovation, meaning if you have some kind of crazy idea that you want to deploy, if you do it on Hyperliquid and it's safe and it's secure, then you'll probably get some good users out of it. So yeah, I'm overall very bullish on the ecosystem as a whole.
Yeah, it makes sense. And obviously that's just Hyperliquid, right? Again, I think you're on Arbitrum, you're on ETH-L1. I think you guys actually integrated this through Stargate and Layer Zero, where it's it's an OFT, if I'm not mistaken. Obviously, from a business perspective, I think it's a great idea to design that from day zero, right? To have that interoperability. But what are some other chains out there outside of the ones you're already on that maybe you guys have seen positive developments or maybe feedback from your clients in terms of like where they want to get their assets onto? Because it's kind of especially in the RWA space, I think everybody has like really turned up the level of competition from the chain perspective. So there's a lot of again, grants and incentives and other network effects that some of these chains are really starting to get aggressive with. So is there any other chains that you guys kind of have your eye on, or are you kind of just trying to settle into the ones that you're on right now?
Yeah, so I guess for some more context, like all of our actual native issuance happens on Ethereum. And that's for obvious reasons. Ethereum is still by far the safest chain to deploy anything on. So that's where we want like our main ledger to be. And then we're on Hyper-EVM, we're on Arbitrum in the process of launching on Base as well. I think these are sort of the ecosystems that are the most sort of lively and vibrant in terms of EVM ecosystems right now, especially for things that are like more finance or DeFi related. So, those were very obvious choices for us. I think what's interesting actually is I've had a few talks with some of like the stablecoin chains that are starting to pop up here over like the past 6 months to a year. And I think there's going to be a lot of demand for those, to be honest. I've talked to a lot of people, a lot of like funds and family offices that are very excited about like deploying capital on those. And if they can do that through Theo, I think there can be like a really powerful synergy there because these chains are very like kind of real world in nature, right? Like their payments chains, they're centered around stable coins, and so I think there's a very good from both like a narrative and also like a more practical side of things, like a very good synergy with RWAs.
Yeah, agree. I mean, especially for something like Theo, right, and the way that you guys are positioned in terms of like the types of RWAs that are coming next, right? I mean, I think T-bills, again, we've seen that, right? There's a lot of T-bill issuers. I think everybody started with T-bills because you want to start with something that's relatively safe, relatively liquid as well, but things are about to heat up based on what I'm hearing, right? In terms of like the types of assets that are going to be tokenized. Obviously, Robinhood had their announcement, tokenizing stocks, but more on like the financial level. I mean, private credit, is in my opinion the next big one. I don't know what you guys are hearing, but I guess my question is for you. What are you guys focused on in terms of what's next after T-bills, right? Because obviously, on one hand, you just launched this product, you want to build liquidity for it, but you also kind of have to plan for like what's next very quickly because it's heating up, right? So, what do you guys? What is most interesting from your perspective, or maybe your client's perspective, in terms of assets that are going to be coming on chain?
Yeah, I think you kind of hit the nail on the head here. It's for us, it's like start with T-bills. It's the most like foundational sort of asset in finance, right? Like it's the money market fund, the risk-free rate. And then always have that as sort of the thing that people can buy to earn like steady yield through Theo. But our plan is actually to start going up the risk curve of assets and start deploying things that have more volatility, that aren't necessarily yield focused, but maybe more about just giving people a way to actually, trade price action of things like commodities. We could do currencies, we can do equities. Like we're set up in a way where it's very flexible in nature. And so all of these things are kind of possible without any additional like structuring or any additional work on our end. Um, I guess like this is we haven't announced this anywhere yet, but the next one that we're gonna launch is gonna actually be like a commodity. And we're gonna do that in a very similar roll that out in a very similar fashion to how we've done TH Bill. So basically allowing people to buy buy this asset on things like Hyperliquid, things like Uniswap, what have you. And I think the really cool component is like all the derivatives that you can launch with these things on chain. So, obviously you have perps, you have lending markets. Like there's like I think there's a really cool opportunity here in like the next 6 months to a year for some markets to pop up that we have never seen before in finance. Obviously, crypto and blockchains are like running 24/7. That's not the case for most of the TradFi markets. And so we'll see kind of how that dynamic plays out. I think there's a few players who are trying to approach being able to price these assets 24/7 in different ways. And so that's really exciting to see. I think that, yeah, I mean, to be honest, I'm very excited because one of the reasons like I initially joined trading when I first graduated was because I had always like heard stories or like watched movies about traders when I was a kid, and I thought it was really interesting. And then when I joined, I realized that like it was like everything had been solved effectively. It was you're just like a glorified risk manager. And so I was a little bit bummed out because like the sort of um heydays of finance seemed like of trading seemed like they had already passed. But I think actually with crypto, like that is kind of coming back in a different way. And I'm really excited about that personally.
Yeah, no, it's a fantastic point actually. I mean, it is kind of like it's an underrated this that's why crypto is going to win ultimately is because it does kind of like as things come on chain, it like resets it back to like day zero, right? And now there's all this design space again, and it's even more flexible than before, right? It's super interesting, and actually, what you're saying. So I think this is unique then about Theo, right? Most tokenizers that I talk to, again, they're focused on private credit. They're focused on invoice financing, payday loans, stuff like that, right? Which obviously is very interesting. But what you just said about the commodities trading really struck me because I think the way that you guys have positioned the launch of like your guys' products specifically on Hyperliquid, on Hypercore, is really, really compelling, right? If Theo kind of becomes this kind of this gateway for these RWAs to get distribution to Hyperliquid, right, which is the most liquid decentralized exchange in existence right now, that's a compelling value prop, right? And I'm sure that's what you guys saw as well, but it is super compelling.
Yeah, that's been the goal since day one. It's I think that if you're able to create like the canonical markets for some of these assets on Hyperliquid, it's not only like it's not only just like a great business by itself, but there's also just a lot of like additional innovations that you can make to how trading just works in general. And I'm just very excited to like dive deeper into that design space, and see what comes of it really.
Yeah, for sure. Let's talk about the business side for Theo for a minute. I don't know if you guys are in this stage yet. So a lot of tokenizers I've talked to are, hey, we're focused on growth. We're not really talking about charging fees. So there's a lot of tokenizers that are doing this for free, right? Because they want to get distribution. They want to obviously get market share. So I don't know if you guys have turned on like the fee switch necessarily for your business, but if it is, where are you guys taking your fees? Or if it's not, where do you guys think you can monetize this in the future?
Yeah, so we don't take any management or like minting or redemption fees because from our perspective, that's just another point of friction that makes these things hard to market make on chain. Um, like when you launch a Hyperliquid market, you actually are able to get 50% of the actual exchange fee that trades through that market. And so that's one of the ways that we're monetizing. And obviously, with something like a money market fund, this is not like a super volatile asset. So the goal was never to really make like a lot of revenue off of this. But I think when you start launching things that are like, slightly higher up in the risk curve, that do have more volatility and react to like news events and things like that, that's when we'll start seeing like the real sort of fees start accruing. And so rather than like, I think a lot of the RWA players, at least the existing ones, rely on things like management fees or they intend to in the long term. Kind of like how I mentioned at the beginning, like we're not really trying to play like the AUM growth game. Rather, we want to play like the utilization game. Like that's sort of the how we're trying to monetize this.
Gotcha. No, I think it makes perfect sense. I'm glad you said that because like one of the when I was preparing for this interview, right? Like one of the main questions I had in my mind was what makes Theo so different compared to OpenEden or Ondo or some of these other kind of tokenization platforms. And I think you hit the nail on the head right there with what you just said, because ultimately it's becoming so competitive, right? That if you are reliant on those management fees, or those performance fees or whatever you want to call it, it's basically going to become a race to zero eventually, right? Um, because people are just going to move their money to wherever the smallest fee is because I think we're headed to that very, very quickly. So it's good that you guys have thought about that. I think deeply in terms of where could you actually monetize and what makes sense from a longevity perspective as well. Um, No, cool. It makes it makes absolute sense. So I guess let's talk about what you guys have going on right now, right? You mentioned incentives. I think you guys are running a points program, or it's coming soon, rather. Um, but what's the plan for the rollout of the points program, and where are you guys kind of focus firing on for that?
Yeah, so liquidity is a big one. Actually, like we're gonna announce the points program on Friday, so there's gonna be a lot more details on how people can like effectively farm that, if that makes sense. But I will say, like, kind of like the headline here is we're really trying to incentivize good liquidity. And this is both like trading liquidity and also lending and leverage liquidity as well. So we're trying to design everything in a way where it's most efficiently going to drive like our assets forward in the way that we think they need to be driven forward. Um, for us to be able to get enough traction and enough sort of like market share to quote unquote become like the canonical asset, like on chain, if that makes sense.
It does. It does. Um, no, it's good. I mean, I'm excited. I'm excited to see how you guys kind of roll things out here in the next 3 to 6 months. Specifically on like the commodity side, like you mentioned, is really, really interesting, especially with that pipeline to Hyperliquid. I think that's going to be big for you guys. Um, well, cool. I think it's a good place for us to start to kind of wrap up. Any kind of closing comments? Anything I missed that you want to highlight before we go?
Not really. I thought that was a pretty like comprehensive conversation. So yeah, thank you for having me on again. Had a great time talking with you, and hopefully the users or sorry, the listeners will get something nice out of this.
Yeah, absolutely. So if you are listening at home or watching at home, definitely check out the show notes. We'll have links out to Theo, where you can find what TK and his group are doing. Definitely check that out. And we'll see you on the next episode of Proof of Vision. We appreciate it, guys.